I know I was interacting with a couple of my viewers in the comment section. While things look pretty scary in Dash, we didn't see as much damage in most of the other cryptocurrencies. So I never really got away from my bullish stance within this crypto. As a quick review here, we have a purple 1, 2, 3, 4, 5 impulse structure. I've taken away the alternate blue patterns that I had before, and I actually altered this a little bit. We rallied higher and more powerfully than in most other cryptos, but we also crashed harder than most other cryptos here. I'm calling this initial drop an A wave, the bounce a B wave, and then here's where things get interesting for Dash. We had a really deep C wave. The C wave manifested itself as a classic ending diagonal, and in an ending diagonal you have a 5-wave structure, but there's a lot of overlap and they often fit within channel trend lines, as you see pictured here. And of course you'll often see the 4th wave right here overlap with the 1st wave down. So again, it's a 1, 2, 3, 4, 5 wave down, and we just barely broke our 76.4% retrace level, which is where I moved the support down to. That was at 152.26, but we just barely broke it, and then we rebounded pretty quickly since, and we may already have 5 up here. I have this marked as a potential 5 up. You see a 1, 2, 3, 4, 5. It actually looks almost like a fractal copy of what we see here in terms of the extensions. And then we have a 3-wave, 2nd wave correction subsequent to that. It doesn't look as impressive as we would have liked, but this aligns very closely with what you see in Ethereum and most other altcoins. With all that being said, it is actually a very good time to buy right now. Maybe a better time to buy now than it was before, just because we do appear to have a micro 1-2 setup. So the bottom looks like it's confirmed. I'm going to keep our support where it is right now, right around 152.26, maybe a little bit lower. It could go as low as 147 where the low was, but I don't want this to go down too much slower because I'm assuming right now that we are done with this micro 2nd wave at about 170. So I really don't want us to break 170 on any further pullbacks. If you've been dollar cost averaging, that's my preferred method for getting invested into cryptocurrencies. So you keep doing your thing. In the big picture, this is the daily logarithmic view. You'll see that our MACD dropped well below 0. So we were very much oversold, and we have mostly reset the sentiment ever since. In Dash, I'm calling the larger rally that started in March of 2020 and ended earlier this year an impulse wave. So I'm looking at this as a wave 1 and the following correction to wave 2 because of how deep it was. This is nearly a 61.8% correction, which you wouldn't typically see for a 4th wave. Then of course we had our 1-2 that we saw close up on in the 1-hour view. And just like with all my other analyses, I have a Fibonacci extension tool built out here. And this is projecting our subwave 3 to fall anywhere within this purple box. The standard extension targets are between $602 and $796. However, we have a couple of key resistances here, a couple of Fibonacci levels we must overcome. So we bumped our heads on the 0.382 extension of the larger structure for the top of our subwave 1. There's also resistance at the 379 mark, which is the 0.5 extension, as well as the 0.618 extension, which is about 516. So if we can clear those, which I'm sure we will after bumping our heads a few times on those, I do expect us to get to the bottom of this box. But there's another strong Fibonacci extension target at the 1.0. This 1.0 is significant because on the big picture off of this 1-2, we typically want our standard target to be the 0.382 extension, and our typical wave 3 based on this 1-2 would be the 1.0 extension. For that reason, I think there's a very high likelihood that we actually hit the top of this box for our subwave 3, which would be at about 1406. Regardless, if we do hit 765, which is kind of my mid-range target for that, we're looking at a 4.5x return, possibly more than that. After a sideways 4th wave consolidation, our subwave 5, which would be the top of a larger wave 3, would fall somewhere between 1128 and 2113. Our standard extensions would have 1128 as the minimum, but again, we have similar strong Fibonacci extension resistances in this region. So I really would like us to see somewhere north of 1406. If we did hit 1406, that would be an 8.5x return, and that would again be the minimum target we're looking at for this subwave 5. However, I have targets with strong confluence above that. We have a target at 2612, and then the top of this box is the 1.382 extension, which would be the standard target if we hit the 1.0 on our subwave 3. So it seems a little far-fetched right now. There's a good chance that we could hit 38.31 on this rally top. And if that happened, we'd have a 23x return from where we are. Awesome potential in Dash. Despite the deep retrace, I don't see this pattern being jeopardized at all. So if you haven't subscribed yet, please do so I can keep updating you on Dash and various other cryptocurrencies. And if you've enjoyed this video, please remember to like. Until next time, thank you for watching and happy trading.